The massive bullishness in the price of gold has created a trend this week for producers reporting their earnings. They've all gone up given the great economics that $3,000 gold presents. Well, except for Andean Precious Metals, that is, whom posted results that the market seemingly really didn't like for whatever reason, with the stock trending down 5% as of the time of assembling this video. Guys, this video is for Big Mike 10960, who requested we cover Andean Precious Metals. So Big Mike, this one's for you. Guys, we're talking Q4 earnings, we're talking Andean Precious Metals. Let's dive in. Andean Precious Metals in the fourth quarter posted revenue of $73 million, which was a 49% improvement over the $48.8 million in top-line revenue reported in the fourth quarter of 2023. The revenue was off the back of the sale of 12,000 ounces of gold and 1.4 million ounces of silver at $25.05 and $30.96 an ounce, respectively. While silver sales were essentially flat year over year, gold sales were up 64%. And in this environment, you couldn't really ask for anything better. Gross operating income also improved, moving from 5.1 million to 23.8 on a year-over-year basis. However, where things fell apart is net income, which declined from 41.5 million or 23 cents per share to 1.7 million or just 1 cent per share in the fourth quarter of 2024. Well, Andean didn't bother to tell us what exactly happened within their earnings release. A look at the financial statements suggests last year's results were juiced by a $39.9 million purchase gain recorded in the fourth quarter, which was obviously a one-time gain. And while Andean doesn't provide an adjusted net income figure, adjusted EBITDA in Q4 improved from 5.1 million or 3 cents per share in Q4 of 2023 to 18.9 million or 12 cents per share in Q4 of 2024, which basically tells a similar story. Free cash flow for the quarter, meanwhile, improved from negative 1.4 million last year to positive 17.9 million this year, which isn't shocking considering the gold environment. For the full fiscal year, revenue doubled from 125.3 million to 254 million, which follows gold sales moving from 7,700 to 50,000 ounces year over year, while silver sales improved from 4.5 million to 4.7 million ounces. Those gold ounces were sold at an average price of $23.32 an ounce, while silver was sold at an average of $28.84 an ounce. Gross operating income, meanwhile, skyrocketed by 383%, going from 14.2 to $68.6 million, while net income fell from 41.9 million or 24 cents a share to 19.2 million or 12 cents a share, which was again a result of that one-time gain. Adjusted EBITDA comparatively improved dramatically, moving from 10.5 million or 6 cents per share to 62.9 million or 41 cents per share in 2024. Free cash flow, meanwhile, went from 4.6 million to a record 34.5. Andean finished the year with cash and cash equivalents of $62.4 million, which was basically flat on the year, where liquid assets sit at $81.6 million. All right, time to look at the production data. The fourth quarter saw Andean Precious Metals produce 11,560 ounces of gold, which is more than double the 5818 ounces produced in Q4 of 2023. Silver production, meanwhile, totaled 1.4 million ounces, a 13% improvement over the 1.2 million ounces produced last year. On a combined basis, it worked out to 27,676 gold equivalent ounces being produced in the fourth quarter, versus 19,896 ounces in the year-ago period. Gold production came from Andean's Golden Queen heap leach mine in California, which produced those ounces at a cash cost of $15.37 an ounce, versus $18.04 an ounce in the prior year. Despite the cash cost improvement, AISC went the other way, climbing from $17.38 an ounce to $21.39. Silver production, meanwhile, came from the San Bartolome asset, which is a processing plant in Bolivia. Cash gross operating margins here improved from $2.83 an ounce to $11.09 an ounce, while the gross margin ratio improved from 15.5% to 43.3% on a per ounce basis, with gross margins per silver equivalent ounce hitting $13.39. For the full fiscal year, gold production rose from 7,000 to 50,000 ounces, while silver production jumped from 4.6 to 4.8 million ounces. On a combined basis, gold equivalent ounces improved from 63,000 to 106,000 ounces, a 70% improvement. For some reason, over the course of 2024, Andean changed from reporting in silver equivalent ounces to gold equivalent ounces. Guidance had called for 10.4 million silver equivalent ounces of production in 2024, which at the time translated to 115,000 gold equivalent ounces, meaning they came up short. Broken out, Golden Queen produced 54,000 gold equivalent ounces, which came up short on guidance that had called for 60,000 ounces to be produced. Cash cost came in at 1501 an ounce versus guidance of 1500 an ounce, while ASIC came in at 2015 an ounce compared to guidance that had called for ASIC of 1750 an ounce. At San Bartolome, 2024 production totaled out at 4.5 million silver equivalent ounces, which also came up short on guidance, which had called for 5 million ounces of production. This was despite recovery rates improving from 78% to 82% over the course of the year. Cash gross operating margins improved to $9.15 an ounce versus guidance of $3.88 an ounce, while the gross margin ratio came out to 38.4% versus guidance of 19.5%. In other words, while some items were a big beat versus guidance, it suggests that Andean doesn't know their own operations very well, at least in terms of financial guidance. So, what does guidance look like for 2025? Andean is calling for consolidated production across their two assets to be in a range of 103 to 117,000 gold equivalent ounces, which on a midpoint basis would mean production growth of just under 4%. In terms of costing, Golden Queen is expected to have cash costs of between $1,500 and $1,800 an ounce, alongside all-in sustaining costs of $1,950 to $2,150 an ounce. At San Bartolome, cash gross operating margins are slated to be between $6.50 and $8.40 an ounce, while margins are expected to be between 29 and 36% an ounce. Capital expenditures, meanwhile, are expected to come in between $28 and $32 million. Of that, 18.3 to 20.2 million is slated for sustaining capital expenses, while 9.9 to 11.8 million is slated to be spent on growth capital. All right, so let's wrap it up. So why didn't the markets like the results? Well, production came in lower than guidance, and costing at the main producing asset, Golden Queen, came in higher than expected. Doesn't get much simpler than that. On the bright side, while costing is expected to be basically flat year over year, Andean is forecasting some mild production growth. And with the current precious metals environment, if that costing can stay flat year on year, the company will still be making money hand over fist. Don't forget that despite the cost increases, they still made record free cash flow in 2024. And that alone is worth celebrating. Guys, we are probably wrapping up earnings season, and we're probably going to get more into the actual specific mining stories. Hopefully, there's lots of activity going on for us to talk about. If there's stories you want us to cover, please let us know in the comment section. Also, if you made it this far in the video, I got to thank you for watching. And if you didn't, please hit that like button. We appreciate any of the engagement we get. All right, everybody, thank you for watching.